welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new week and the SGX is hinting at a softish start for the Indian markets after a 9-day winning streak, which, by the way, is the longest winning streak since October 2020. So over the next 30 minutes, we'll be talking about the cues for trade. Infosys is, disappointing fourth quarter show, HDFC Bank's fourth quarter show, as well as stocks like Z Entertainment on how they will be reacting to news flow in today's session. Of course, we'll also be getting all your stock-related queries answered by our experts on the show. So if you have any queries, don't forget to send them in to us on our live feed and we'll have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Well, the Dow ended lower on Friday but managed to clock a 4-week winning streak. Tech-heavy Nasdaq 2 gains for 4 weeks out of 5. US futures, however, edge higher as banking giants JP Morgan and Wells Fargo report bumper quarterly profits amid industry turmoil. Meanwhile, Asia is largely lower with the adjusted SGX Nifty indicating a lower start for the Indian market. Infosys reports a howler of a quarter. Downgrades pour in as earnings miss estimates on all counts. The software giant also gives a cautious guidance, says the outlook for the business remains uncertain. HDFC Bank shows strong growth in net interest income while asset quality and net interest margin remain stable. Profit misses estimates as operating expenses remain elevated due to branch expansion. Well, let's bring on board then Rajesh Palviya of Axis Securities to decode what the setup is looking like for the markets this Monday morning. Good morning, Rajesh. Good to have you. I'm sure you must have had a relaxed long weekend, but now it's back to the markets and it's a full 5-day working week for us. SGX Nifty is hinting at a softish start for the Indian market, but Nifty has clocked in a 9-day rally, and we've seen FII also make a comeback when it comes to the Indian markets. 17,800 conquered last week. What are the kind of levels you'll be watching out for today?
Good morning, Anita. So definitely we are in bullish territory as we look at both the indices. Both the indices are now trading above their important moving averages for near-term to short-term setup. And if we look at the overall setup, it's a third consecutive week where we are seeing both the indices are forming higher high formation. That's adding up the bullishness. And looking at the data setup also, the base has already shifted higher for Nifty. Now the major support area which we can see based on the put concentration, that is at around 17,700 and 17,800 is also adding up the put base. So looking at the overall setup, we believe that buy on dip should be the strategy at this juncture. If we get any opportunity to get the market opening near to 17,800, even 17,750 level, that's a buying opportunity for the market. One can keep their stop losses at around 17,700. Until Nifty not breaks below 17,700, one should hold their long position. And once we able to sustain above again 17,850 or 17,880 level, then possibly Nifty can start another round of rally towards 18,000 mark also. Though 18,000 is having major call concentration, so it will require major trigger to give that breakout. So as the earnings season is now started, so if anything comes positive on the any kind of large cap stocks earning, then it could give some kind of positive trigger to the market, and possibly then Nifty can crosses this 18,000 mark also. But as of now, we believe some range bound momentum we can expect with the positive bias 17,700 to 17,900. This could be the possible range we can expect for some couple of trading session.
Right, let's of course shift focus to the IT pack. Then, TCS reported a muted set of numbers. The outlook wasn't all that great and stock reacted to that as well. But it's Infosys, that has a bigger weightage on the Nifty compared to TCS, and it was a howler of a quarter, with CC revenue guidance of, in fact, CC revenue contracting by 3.2%. You had profit fall 7% on a quarter-on-quarter basis. Margins have contracted by 50 basis points. Even the guidance has disappointed when it comes to revenues as well as margins. And if you look at the brokerage views, a slew of downgrades has come in. Nomura has downgraded the stock to neutral. Target has been cut to 1290 rupees versus 1660. It's saying that Q4 has been a miss on all fronts. It has cut FY24, FY25 estimates by 8 to 9%. It says that growth differential with TCS is also set to narrow. JP Morgan, on the other hand, has downgraded the stock to underweight. And in fact, target has been cut to 1200 from 1500 per share. The revenue estimate has been cut by 4 to 5% and margin by 70 basis points, which will drive an EPS cut of 8 to 9% over FY24, FY25, according to JP Morgan. It also says that the company is prone to subsequent downgrades. CLSA, on the other hand, has downgraded the stock to outperform from buy, target cut to 1550 from 1800 rupees per share. Weak margin outlook and disappointing FY24 guidance. FY24 EBIT margin guidance has, of course, disappointed, driving a 6 to 5% cut to FY24 to FY25 EPS estimates. Citi has downgraded the stock to neutral. So a lot of downgrades coming in. And in fact, if you look at the Infosys ADR, that also lost somewhere around 11% in a matter of 2 sessions. That's Thursday and Friday. Rajesh, what's your own take on Infosys? What are the charts suggesting extreme weakness coming in today's session?
So it was clearly weakness was there in Infosys itself, and in the last week itself, ahead of result, we have initiated already bear put spread strategy also for our client. As the data setup for Infosys is on the bearish side, a lot of call writing activity was there at 1400 strike and 1450 strike. So. And almost stock is trading below to all its important moving average and trading near to its multiple support area, which is very critical for the Infosys. If in today's session stock breaks below 1360 level, then possibly we can see a downward target towards 1300, even 1280 on the downside. That is the next major area where we can see Infosys to go down. So as our view is already bearish, so we have already initiated the short strategy. If you get any chance in opening towards 1360 and you get that opportunity, you can go short with stop loss of 1400 for downside target of 1300 for the Infosys. So overall setup for Infosys is on the negative side, and it's closed almost near to its critical support area. And as the ADR is already indicating that there is a downtick around 10%. So we can expect a target towards 1320, 1300 in the today's session.
Right. So those are the levels to watch out for in Infosys. Rajesh, hold that thought. I'll come back to you and we'll discuss other stocks in news today. But before that, let me get on board Neha Dave from Moneycontrol Pro, who will be putting into perspective what HDFC's fourth quarter show means and how you should be playing the stock now. Good morning, Neha. Good to have you on the show. Well, it was a stable quarter if you see it on, at a glance, because, profits grew 20%. In fact, slippage ratio was down somewhere, it's in fact at a six-quarter low. What is your key takeaway from the numbers, and how should one be navigating the stock now?
Yes, so HDFC Bank reported the consistent numbers as ever. Net profit growth of 20% was aided by healthy loan growth and a very low credit cost, even as operating expenses surged because the bank is on a branch opening spree. So overall, the numbers were very good in terms of asset quality. The uptrend continued, underscored by a fall in gross NPA ratio and restructured assets. So while the bank continued to deliver the consistent earnings and return on asset was around 2.1% for FY23, the stock movement in the near term will be determined by merger-related news. One of the key trigger that the street will be closely watching is RBI's stance on the relaxation which the bank has sought from the regulator. HDFC Bank has requested RBI some relaxation to meet the priority sector requirements as well as CRR and SLR post the merger. So while the bank awaits the regulator's decision on the same, it continues to grow its business on a war footing, especially the deposit side. In the current quarter also, we saw that while advances growth moderated a bit, deposit growth was very, very strong. And this is the key highlight and one of the key highlight from HDFC Bank's results. So one thing that street needs to watch out is what is RBI's stance in the near term. Other thing that the key thing for the stock would be, the weightage of the merged entity in MSCI, and this would influence inflows in the stock and could determine the stock price in the short term. Now, these are some of the near-term triggers till the merger gets executed. However, if we look from the longer-term perspective, the story looks fabulous. At the time when the banking system liquidity is very tight and there has been a wide gap between the credit and the deposit growth, with deposit growth significantly lagging the credit growth, HDFC Bank's show has been very strong. Its deposit growth of 21% is double that of banking system overall deposit growth. Now, this indicates the strength of its liability franchise. Also, it indicates some of the strategy that has been implemented by the management of focusing on branch opening, and even as its cost to income ratio has inched up significantly as compared to the last year.
Right. Neha, on one side, we've seen the slippage ratio slump to a 6-quarter low, which is a positive. Of course, we've seen asset quality improve on a quarter-on-quarter basis, but it's the CASA ratio that has in fact slowed down a bit. Any other concerns emerging, and what about the merger timeline with HDFC? Has the management given some color as to when that will be completed?
Yes, so management has indicated around July is the time that one can expect the merger-related stuff to get completed. Before that, there would be some, some notification from the regulator in terms of what is the regulator's stance on terms of whether it would allow HDFC Bank the phased approach to meet the regulatory requirements. So this is one of the key things. Now, as you mentioned, that asset quality continues to be impeccable. Credit cost is very low, and this credit cost in the current quarter was low despite the bank creating contingent provision of around 300 crores. So it continues to be one of the key driver of earnings. Also, in terms of operating cost, it has reached up, but we know that the bank is on a branch opening spree, and that it will contribute. The new branches that are the bank is opening currently will contribute in future. One of the things that you mentioned is the CASA ratio. Obviously, the CASA ratio of the bank, when you compare it to the last year, has moderated. It is at 44%, and in the long term, management is indicating something like of 40% kind of a range. Primarily because the bank is currently focusing on garnering time deposits, also because the interest rates have moved up and a lot of funds deposits is moving from CASA to the fixed deposits. So CASA ratio for the overall system has moderated. So the decline for HDFC Bank is not much a concern. In fact, as I mentioned, that deposit growth continues to be one of its key strength at a time when most private banks or the banking system as a whole is growing its deposit by 10%. HDFC is growing its deposit by 21%, so which is commendable.
Right, Neha, thanks a lot for taking out time and putting things into perspective and decoding the numbers for us. Coming back to Rajesh, then Rajesh, what's your view on HDFC Bank? A stable set of numbers, and of course we are also getting some queries from our viewers on other banks like PNB. Ashok Kandakuri has written in and he wants to know your thoughts on this one. And we also have a query on Axis Bank. Vedanta has written in and he wants to know your short-term target for Axis Bank. So how would you view this entire private banking as well as PSU banking pack for today's session?
So as I mentioned earlier also, that very strong setup for Nifty also, and banking stocks have done well, especially in last couple of weeks. And looking at the overall setup, we believe that, a buy on dip should be the strategy for private bank as well as for PSU bank. Both the banks are looking attractive at this juncture. If you get any opportunity in today's session, as SGS is indicating that, some downtick we can expect in the opening. But again, overall setup for banking stocks are on the bullish side. If you talk about HDFC Bank, very strong buying action in last 3 weeks. And looking at the overall setup, there is a long built-up. Stock managed to give breakout of its multiple resistance zone area. Stock is already almost trading near to its immediate call concentration base area, which is at 1700 level. So if at all HDFC Bank manages to cross above 1700 level, then there could be one round of short covering we can expect in the stock prices, and possibly this stock can move further higher towards 1740, even 1750 level in the continuation of this uptrend. So one can hold their long position. Now the trailing stop loss to hold long position for HDFC is around 1660, and we are bullish to have a target of 1730, 1740 in the continuation of this uptrend. If we analyze the structure for PNB, there was recovery since last 2-3 weeks. But still, stock is struggling to cross its immediate resistance area of 48-49, which is very important to cross on the higher side. If the stock crosses this 49 level, then PNB can show further more bullishness from the current level, and then upside target could be around 55 to 56 in the continuation of this pullback. So if you are already holding your long position, you should keep a stop loss of 45.50 to hold your position on PNB. I'm sorry to say about the Axis Bank because I cannot give any comment on Axis Bank. It's our parent company.
Sure, Rajesh. One stock that will be in focus today is Z. You know, Invesco Oppenheimer is likely to sell over 5.5% via block deal, and offer price is likely in the range of 199.80 rupees to 208 and a little over that. How would you play this stock in today's session? Stock has, lost some. In fact, lost somewhere around 2% over the last 5 days. Do you expect some bit of weakness in today's session, given the fact that the pricing is a little, at a discount to the current price?
So overall, structure for Z Entertainment is on the bearish side only, stock trying to recover, but still this recovery is not sufficient to come out from this bearish phase of the stock. Even in this recovery, even if stock comes near to 215, 220 level, also one can exit from their position, because overall structure for Z Limited is weak, and we believe that another round of selling pressure we can expect around these level. So 215, 220 are the critical resistance area for the stock, and if it continues to remain below these level, one can exit from their position. And again, if it breaks below 198 level, then possibly again it will start its downward momentum towards 185, even 180 zone also.
Right, we had two queries on this stock. Hope this answers your query, and those are the levels that Rajesh mentioned that you should be watching out for on the stock. We also have one query coming in from Ganesh Surana, and he wants to know your thoughts on Tata Elxsi. If you look at the stock, over the last 5 days, it hasn't done all that badly. It has gained somewhere around 3.5%, but it's way off from its 52-week highs now. What would you advise him to do on this stock?
So overall, short to medium term structure is on the weak side. Though stock has shown some recovery from its support area, multiple support area of 5,800, and some recovery is there. But still, even this recovery is not sufficient to take out this stock from this bearish zone. So the major resistance for the stock on the higher side is at around 6,700, 6,750 is the major hurdle for the stock. If at all stock crosses those levels on a weekly closing basis, then some sort of buying interest we can expect in the stock prices. As of now, sell on rise should be the strategy for the stock until the stock not crosses above 6,750 level on a weekly closing basis. On the downside, if it's again breaks below 6,000 level, then it will again, continue its downward momentum, and possibly again it may retest its previous swing low, which was at around 5850 level.
Right. Those are the levels to watch out for on Tata Elxsi. But let's also take up a query on ITC. Now, this stock is, knocking at 400 levels. It did hit a 52-week high very recently. Do you expect this 400 level in a couple of days?
Yeah, very strong setup for ITC, and stock is enjoying its almost all-time high trajectory. It's a fourth consecutive 1 month where we are seeing, buying interest is there in the stock prices. Looking at the overall setup, one can buy and accumulate this stock in the range of 395 to 385. One can keep a stop loss of 375. And yes, possibly looking at the overall setup, we believe that a stock can give breakout above 400 level, and then stock can really further higher towards 430, 440 in the short term.
Right, strong setup for ITC there. Let's take up a query on NTPC then. Karthi V. Kayan has written in, and he wants to know your thoughts on NTPC. He says that the company was the top loser on the Nifty last week, but it still managed to stay above that 170 level. Is it a good time to buy into the counter for the short term?
Yeah, so strong buying action we have seen in last couple of months, but some consolidation action is happening on the stock prices. Looking at the setup, yes, 170 is the immediate support area, which is almost 50-day, which is almost at 100-day moving average for the stock. So yes, 170 should be your stop loss if you are taking your trading position at the current juncture. But if you want to buy and accumulate this stock for short to medium term perspective, you can buy and accumulate. Even if it breaks below 170, 165 is the next level where stock may try to find support area because it's coincide with the 200-day moving average. So overall, 165 should be your stop loss if you are buying this decline. Once stock crosses above 180 level, then it may again continue its upward momentum towards 195 to 200 level.
Right, so that's a strategy to adopt on NTPC. Now, we have a query from Satya CK, and he wants to know which is the best stock on chart when it comes to the infrastructure sector that one should be looking at. I also want to add in the realty pack. After the RBI policy, we have seen a tremendous rally come in some of those realty counters like DLF. So what should one be doing with realty stocks, and what is the best one looking which is the best stock that's that warrants a buy when it comes to the infrastructure space now?
Definitely, real estate space has done well, especially in last 2-3 weeks, and most of the stocks have recovered from their recent low. The stock which we like from this space, that is DLF, Godrej Property, and Oberoi Realty. These three stocks are looking very attractive on the technical setup. DLF is almost on a verge of giving breakout of its multiple resistance area, and we believe that looking at the overall data setup, we believe that this breakout can happen in coming trading session, and possibly DLF can continue its rally towards 440, 450 level. So DLF is a buy from this space, and one can keep his stop loss at around 398. Another stock which we like from this space, that is Godrej Property. Stock managed to give breakout of its falling channel on the weekly chart, and very strong buying action in the last week. And looking at the overall setup, we believe that Godrej Property can continue further more upside momentum towards 1360, 1380 level. One can buy and accumulate this stock with stop loss of 1245.
Rajesh, before I come to your picks, I want to squeeze in one last query on IEX. Prabhu has written in, and he wants to know your long-term view on the stock. Now, this stock has been on a tear. Over the last 5 sessions, it has gained somewhere around 10% or thereabouts. What is the long-term view looking like for this stock?
So we have seen stock has corrected significantly from its all-time high level, and now stock is trying to form a base. Almost 5-6 month consolidation we are witnessing in the stock prices. Looking at the overall setup, we believe that if stock continues to hold above 135 level, then one can buy and accumulate this stock for long-term basis also. On the higher side, if stock crosses above 168 level, then next target for the stock on the medium-term perspective could be 200 level also. So after a correction, yes, there is a consolidation is happening on the monthly chart, and one can buy and accumulate this stock for a long-term perspective also. We are projecting target of 200, keep a stop loss of 135.
Right, Rajesh, thanks a lot for answering all our viewer queries this morning. But before I let you go, do leave us with some stock recommendations for viewers this morning.
So DLF, I have already mentioned. DLF is one pick which we like at the current level. 444, 45 is our target. Keep stop loss of 398. Another stock which we like, that is Aarti Drugs. After a significant corrective action, stock is now recovering. And looking at the weekly setup, we believe that this stock can further move further higher from the current level. So 445 is the target. Keep stop loss of 400. Third stock is from oil and gas sector, that is IGL. Stock managed to give breakout of its almost 12 consecutive week, and looking at the overall setup, we believe that this stock can continue its upward momentum towards 515, 520 level. One can buy IGL also with stop loss of 470.
Well, all right. Those are the stock recommendations coming in from Rajesh this Monday morning. With that, Rajesh, thanks a lot for taking out time and joining us and answering all of your queries as well. Well, with that, we are completely timed out on this edition of Morning Trade. So it's a goodbye from me and the team that put the show together. But don't go anywhere, because coming up next is Opening Bell.